For decades, retail investors, financial journalists, and optimistic day traders committed the exact same fatal error when looking at the global stock market. They looked at the flashing green and red tickers on their screens, read the meticulously crafted earnings reports, studied the classical economic theories of supply and demand, and they genuinely believed they were participating in a fair, efficient, and transparent financial ecosystem. They saw the stock market as a democratic arena where intelligent research, patience, and fundamental analysis would inevitably be rewarded. They believed the comforting, institutional narrative that the market was an impartial judge of corporate value. But underneath that carefully constructed, profoundly deceptive facade lay an absolute apex predator, a shadowy, coordinated syndicate of financial leviathans operating with a level of cold, calculating violence that left entire generations of retail investors hollowed out and financially paralyzed. The inexplicable, terrifying flash crashes that instantly wiped out millions of retirement portfolios. The coordinated, merciless short seller attacks that systematically strangled promising, innovative startups. The brutal, perfectly timed pre-market price spikes that locked ordinary buyers out of massive gains, and the sudden manufactured liquidity crises that forced panicked selling at the absolute bottom of the market. These were not random market fluctuations. They were systematic, orchestrated executions. This invisible network waited in the shadows while retail investors eagerly poured their savings into heavily promoted assets, and when the psychological euphoria reached its absolute peak, they struck with ruthless, merciless efficiency, feasting on the decaying portfolios of the uninformed and the overambitious. Any individual investor attempting to trade on fundamental corporate value should have been completely annihilated within days. Any ordinary participant trying to build wealth through rational analysis would be inevitably crushed under the suffocating weight of algorithmic high-frequency dominance, swallowed by the opaque, unlit depths of dark pool trading, or simply starved of oxygen by a predatory system mathematically designed to transfer wealth from the patient, many, to the coordinated few. The modern financial market is a brutal Darwinian slaughterhouse where 90% of retail traders lose their capital, where the median participant is essentially providing exit liquidity for institutional giants. The odds for an outsider were not just unfavorable, they were structurally, mathematically, and intentionally impossible. But instead of engaging in traditional competition, a covert alliance of unregulated hedge funds, ultra-fast market makers, and secretive family offices did the unthinkable. They rejected the concept of fair market discovery entirely. They built in absolute, deliberate silence, treating market manipulation not as an illegal anomaly, but as the core, foundational architecture of their business model. They understood something that the retail public utterly refused to acknowledge. True financial power is not about predicting the future. It is about actively, forcefully dictating it. This is the story of how an invisible investment mafia invented the ultimate financial extraction machine, turned the global illusion of a free market into a ruthless war of psychological manipulation, and learned how to deliberately weaponize volatility in order to ultimately dictate global valuations in absolute secrecy. To understand the sheer, terrifying depth of this financial cartel, we must rewind time far back to the aftermath of the 2008 financial crisis. The public relations myth is romantic and reassuring. Regulators cracked down on the greedy investment banks, implemented massive transparency rules, and created a safer, more equitable market for the everyday investor. This is a profound, monumental historical illusion. The true origin of this shadow empire is forged in regulatory evasion, predatory calculation, and the relentless pursuit of asymmetrical advantage, when the massive traditional banks were forced to de-risk and step out of proprietary trading. The true concentrated power didn't disappear. It simply mutated. It moved into the absolute darkness of unregulated entities, proprietary algorithmic trading firms, and opaque market makers. In the chaotic aftermath of the global collapse, these entities performed the ultimate act of financial cannibalism. They mercilessly drained the talent, the algorithms, and the aggressive trading models from the heavily regulated banks, leaving behind heavily monitored husks while birthing a new, untraceable financial leviathan that answered to no government and operated entirely outside the traditional banking system. Their ultimate weapon was something entirely invisible: the absolute monopolization of information and order flow. While mortal retail investors were staring at delayed price charts and submitting orders through standard brokerage applications, this entity discovered a profound, incredibly lucrative structural loophole in the very plumbing of the financial universe. Through a practice known as payment for order flow, they legally purchased the right to see the buy and sell orders of millions of retail investors milliseconds before those orders were actually executed on the public exchanges. They essentially acquired the ability to see the future. This was not trading. This was industrialized front-running. They weaponized this microscopic time advantage to buy the asset a fraction of a second before the retail crowd and immediately sell it back to them at a micro-penny profit. While rival participants were suffocating under the crushing weight of unpredictability and market risk, this empire was always armed with absolute certainty, generating billions of dollars in risk-free profit by inserting themselves as an unavoidable, invisible toll booth between the buyer and the seller. It was a structural advantage so profoundly unfair that it functioned like a permanent, legally sanctioned cheat code for extracting infinite wealth from the financial reality, and it led to an unprecedented golden era of absolute, terrifying expansion. The sheer scale of their subsequent conquests defied all mortal comprehension. They controlled over 50% of all daily trading volume in the United States without ever appearing on a public leaderboard. They swallowed massive, sprawling segments of the market into private dark pools where they could match colossal institutional orders entirely hidden from the public tape, preventing the retail market from ever seeing the true supply and demand dynamics until it was far too late. They accumulated controlling, unassailable power over the pricing mechanisms of the most ubiquitous companies on Earth. They sat on war chests so massive they could trigger a broad market sell-off simply by withdrawing their liquidity for a few agonizing minutes. The traditional corporate world entirely bowed before them. They were no longer just trading stocks. They had become the de facto nervous system of global capitalism. The hubris of their total, unregulated dominance was absolutely intoxicating. But the higher the incredible, invisible ascent, the more devastating the inevitable, brutal fall. And the shock to their system was agonizing, deeply humiliating, and incredibly expensive. The corporate apocalypse did not come from aggressive regulators or brilliant institutional competitors. It came from the absolute, unlikeliest of sources, a chaotic, decentralized swarm of retail investors. In the early months of 2021, the investment mafia faced a catastrophic, unforced error born of pure, arrogant overreach. They had ruthlessly shorted massive, struggling companies, betting billions on their inevitable bankruptcy and nakedly selling more shares than actually existed. But a massive, coordinated digital uprising on social media forums identified this exposed, greedy position. Millions of amateur investors weaponized their collective capital and attacked. The resulting short squeeze was an absolute massacre. The hedge funds lost tens of billions of dollars in a matter of days. Prestigious, untouchable firms were pushed to the absolute brink of insolvency, forced to beg for emergency capital injections to survive the weekend. There were prolonged, terrifying moments when it seemed like the definitive end. It seemed the magic of their algorithmic dominance had finally completely evaporated, that the sheer bloated size of their hubris had made them vulnerable, and that they would slowly, agonizingly bleed out at the hands of the very retail public they had systematically exploited for a decade. Yet, here lies the grand corporate plot twist. Every single time the public prepared to read the final eulogy of the institutional establishment, a devastating counteroffensive occurred. The syndicate did not surrender, and they did not die. Instead, they absorbed the rebellion. While the retail swarm celebrated their supposed victory, the invisible mafia activated a terrifying response. They restricted trading on the retail platforms they effectively controlled. They aggressively deployed advanced sentiment analysis, artificial intelligence, to scrape the very forums the retail investors were using to coordinate, turning the rebellion's transparency into an actionable data feed. They began to front-run the meme stock rallies, silently buying into the hype before it accelerated, and ruthlessly dumping massive positions on the euphoric amateurs at the absolute dizzying peak. They literally digested the sheer panic and the manic euphoria of the populist uprising, transforming the existential threat of retail coordination into the most aggressive, profitable extraction phase the operation had ever executed. They left millions of retail traders holding catastrophic, worthless bags of equity while they quietly retreated back into the shadows, their capital fortresses larger and more impenetrable than ever before. Fast forward to the modern era, and the battlefield has fundamentally, radically shifted. Regulators are aggressively circling, threatening to completely ban the payment for order flow mechanisms that built their invisible wealth. Artificial intelligence has democratized high-level quantitative analysis, offering retail traders a fraction of the computational power previously reserved for the elite. The global political climate is increasingly, intensely hostile to opaque financial engineering. The world is actively, aggressively trying to force the mafia into the sunlight. Yet, this syndicate executed another radical, breathtaking pivot. They transitioned away from easily monitored public equities and plunged deep into the lawless, unregulated frontiers of private credit, decentralized cryptocurrencies, and aggressively complex, synthetic derivatives. They deployed artificial intelligence, not just to trade, but to systematically manufacture market narratives, utilizing automated networks to generate highly targeted financial media designed specifically to manipulate retail sentiment before major institutional dumps. The empire did not just survive the transparency revolution. It used the chaos of regulatory upheaval as cover to consolidate even further, moving their extraction engines into asset classes so complex that neither the public nor the regulators even possess the vocabulary to describe them. This was not just a strategic pivot. It was a profound, aggressive statement to the entire global economy. While you are trying to regulate the battlefields of the past, we are already monopolizing the financial architecture of the future, and you will reckon with us. They forged the ultimate financial mechanism for permanent survival, a decentralized, completely emotionless network that does not invest in human progress, does not build infrastructure, and does not create tangible value. It simply intercepts, it manipulates, and it ruthlessly extracts. We are left looking at two entirely irreconcilable visions of this phenomenon. On one hand, it is a deeply unsettling, dystopian, wealth-hoarding mechanism, a sprawling parasitic monster that starves true corporate innovation by artificially distorting valuations, profiting enormously off the destruction of targeted companies, the forced panic of ordinary investors, and the systematic erosion of market integrity. On the other hand, it is the ultimate, undeniable masterpiece of market efficiency, the absolute, indispensable provider of liquidity that ensures trades execute instantly, an essential, towering pillar of the modern economic system, without which the entire global market would instantly freeze into a catastrophic, illiquid standstill. Because sometimes, hidden behind the simple, flashing ticker symbols of the global stock exchange, there is a quiet, invisible war. A war between the manipulative, predatory syndicates they were in the past, the untouchable, algorithmic market makers they are today, and how the world desperately, naively wants to see them.